Audit. First of all, before I start, there's one very important thing I would like to do, and that is to address the principles behind audit. Because if the principles is not known, right, all these hours that you spend studying audits most likely will be a waste. So it's very important that you understand, just like everything in this life, once you know the principle, just like maybe when you are driving, you know the principles to drive, you have a very successful driving experience. Or maybe you want to go to the moon, you know the principle of gravity, you would the person will not crash. You understand? So it's just about understanding how to go about it. Sorry, hold on, I want to admit some. Alright. So just basically how to go about it. That's how. So first and foremost, audit and assurance, right, is not a comprehension. It's not English language essay, or you're writing English language. The examiner asks you to explain maybe audit review, an engagement assignment, assurance. It doesn't expect you to just use your mere terms. Like, or let me just use an example now. Like audit is when somebody goes to a okay. Audit is when the management of or the board of Access Bank PLC, they are suspecting that the treasurer there's fraud in the treasury department. So they call someone to go and check the fraud. So he goes there and he writes his report that there's fraud or there's no fraud. There should be that terminology, right? True and fair. Anyway, we'll still go into that. As we go through the text, you should note certain languages in medicine or in the professional world they call it jargons, right? So you should note words like true or fair, independent opinion. Those are the words that the examiners are looking for. Utmost good faith. So and that's very important. That's by the side. And the second thing which I observed in my experience with this audit is that, and also students that write audits, is that when you want to write audits, I understand that we are actually very busy people, right? We have a banker, we have someone working in the bursary. That's great. Even me too, I'm also a busy person. But the honest truth is that there's no shortcut to success. I'm kind of taking my time to explain this because so that this is going to be our last time, and I hope it's going to be. So these principles are very important. There is no shortcut towards passing audit. It is very important that if you are going to write the exam in a few months' time, you start reading now, right? Even though it's just 1 hour, or 30 minutes a day, it's still something. Because if it's 2 weeks before the examination and you start to read it, I'm telling you, it's there's a very high possibility that the students will get to the exam, or you see the questions and you'll be like, but I read this thing now. I read this thing. I know it now. But maybe it's audit engagement. I read it now. Maybe it's auditor's liability. I read it now. But do you get? Because the students use just like maybe 2 weeks to prepare. So everything is muddled up in the student's head. Now, and the third thing now is solving past questions. It's actually very, very important. Even as we go on the course of this program, this lecture, we're going to be studying past questions. In fact, it's going to be compiled in your lecture notes. So it's very, very key. We understand the principle already that students must go through their past questions. So we'll go through it with you after each class. Even though we don't do it in this present class, the next class, that will be the first thing we'll start with. But we'll try our best to make sure that as we are closing the class, we'll solve past questions. And also, I'll be giving out assignments, because I know that if assignments is given, at least, even though the student seems to be very busy during the week, at least when he goes through the assignments, that residual knowledge that he or she has, you put it to play and submit the assignment. So that's what we're going to be doing. And please, I need your partnership. I need you to speak up when you don't understand. As I said, it is not right to be confused. Right, so in this lecture, once you seem to be confused, just voice out. And please, from time to time, I'm going to be asking questions. So just be ready to answer. And if you do not understand, as I said, please take me back to where I stopped. Alright, an audit, introduction to audit and assurance. Definition of audit. I know that if you have been in practice at least for a year or let's say 2 years, you should have seen an auditor walk into your office, right? At least, or an auditor come to you to say, oh, yeah, provide me this document, provide me your receivable schedule, provide me your cash position, or I want to do a cash count, depending on the maybe it's an internal auditor or an external auditor, or you might say, give me your loan amortization schedule, your trial balance. Although most of them like to ask for the trial balance because a trial balance lets you know if the company is sick. If I walk into your company and I want to know if the account is sick, I want to know if the account department is sick. One, or I want to know if the account department is not efficient. Two, or I want to know if there's fraud. Three, or I want to know if the accountant procrastinates. I'll ask, give me your trial balance. So when I see your trial balance, I'll know something's wrong. So that is another, although that we are going to get to that, is another side of our reading, but not this topic. More like a substantial, an approach to a substantial test. These individuals or these professionals, let me use the word professionals, they are not just accountants or they're actually member of the institute, which we aspire to be, because it requires a lot of detail, it requires a lot of professional and or technical experience to be able to assess the financial system of a company, because a lot of them can be quite complicated. So as I said, these are professionals. It is expected by the law or expected by statute that they are chartered accountants and they review the accounts of the company and give an independent opinion. Please note that down. Independent opinion whether the financial statement is true or fair. Is true or fair. Is true or fair. Please, this independent opinion, which let me just pause to address this. Now, auditors normally should not be seen to be your friend. Yes, they should not even be seen to your. They should be seen as someone that, okay, I've come to do an assignment. I don't know you. You don't know me. So that is a layman explanation of independent opinion. Okay. So after reviewing your your financial assessment, they'll give an opinion to say, okay, fine. Is it qualified or unqualified opinion? So basically, from our text, audit can be defined as an independent examination of an expression of opinion on the financial statement of an enterprise by an appointed auditor in accordance with the terms of engagement and in compliance with statutory obligation and other professional requirements. With this definition, I will first start with independent examination, which I have expressed. And an auditor should not be someone to be deemed not to be independent. For instance, an auditor most likely will not be someone that is a friend to your managing director. An auditor, although in Nigeria it happens, yes, because it's all about I know this person. In fact, I've worked in several companies that the auditor is like where I used to work before. I used to work in a pharmaceutical company. So the auditor is actually a friend to the mother of the owner of the company. That is not independent opinion. Although it came in through recommendation, but still that is not an independent person that will give an independent opinion. Or let me give an example. If I'm the accountant of maybe a pharmaceutical company, let's say Fitson PLC, I cannot bring in my friend to be the auditor, because once that familiarity trait comes in, it will affect. I'll be biased. There'll be this bias judgments I will give because he's my friend. I don't want his job to be jeopardized, so I will now let it look as if yes, he has been doing his job as he ought to do. But however, which is still not right, even though the auditor is a friend to the accountant, but still he should try his best, which is quite difficult, to make it not look like, I'm using simpler terms, although we are still going to get to topics that will address this, but it should not make it look like you're a friend to someone in the company. The major point is that you are independent. This is a very key terminology. So anytime we are trying to define audits, which I know this question can't just come up, define audits, right? Although elements, define some elements can come up, but just define can't be there. But however, in defining the different aspects of this text, we should always remember that word independent, depending on how they ask us to, the question they ask us to. Just remember that an auditor is an independent person. Okay, so it's going to be appointed and is in accordance with terms of engagement and in compliance with statutory obligation. Right now, most of us that work in different companies, I know we'll be wrapping up now. We're trying to prepare our books. If we are kind of not done reconciliation, we begin to hammer, oh yeah, reconcile. Where's our schedules? Look at your trial balance. Because normally, even the government, which is the stakeholder, the tax person, he wants to collect his taxes and he ensures that your financials should even be audited. So it is statutory. It's a statutory obligation that you should do your audit. So there's what they call a statutory audit. So no company can escape that. It's only maybe even if you're a startup, at least from your commencement date till you must do a statutory audit. So it's a statutory obligation, and your company should try its possible best to find an independent person that will do that review. All right. So according to ISA 200, it says that the purpose of an audit is to enhance the degree of confidence of intended users in the financial statement. I repeat, ISA 200 or ISA 200 say that the purpose of an audit is to enhance the degree of confidence, of intended users in the financial statements. Also, one of the reasons of audits is because at every point in time, the owner of the business, which I can also call, or we can also call it the shareholders, cannot be involved in day-to-day activities of the business. In a typical business or in a typical company, let's say a company quoted in Nigerian Stock Exchange, like maybe Dangote PLC or MTN Nigeria or Access Bank PLC. There are certain individuals that will contribute to the capital, the share capital, the make-up share capital of Access Bank, right? And also there will be some managers, regional managers, managing directors, and all of that these owners of the business, the shareholders, has given or let me use the word entrusted the business to. That okay, fine, this is our business. We have contributed the capital, but we want to, because of your expertise, we have the money, because some of them have the money, but they may not have the time or the expertise in running a business. But the major important thing is that they actually have the money. So they have invested in the business, they are investors, so they expect that the managers run the business efficiently, effectively, manage the resources to achieve a desired output or objective. Between these, so if you now look at this very well, there's going to be a gap between, or there is a gap between the managers of the business and the owners of the business. And there will be someone to check. There's a need for someone to check the managers of the business. Because if there's nobody to check them, the managers would, in accounting, what they call window dress, they can window dress the account to make it look as if the business is making possibly a lower profit or an higher profit just to suit them. Or they can mismanage the funds, possibly inflating an invoice to suit them and paying out money to maybe a company that is also owned by them, or they'll just make up a supplier and pay up, or they could just have a partnership with suppliers and pay them high figures, and in the books of the account it look as if the company is paying for some raw materials at a very high cost. So there are so many ways that managers can embezzle funds, right? So now that is where the auditor comes in. The auditor is just like a police to check if the financial statement that is prepared by the managers is true or fair. Alright, the reason why I'm doing this is because I want to take a more painstaking approach to ensure that we understand very well. Because if we understand this introduction, it's more like the foundation. So audit and assurance, once you can understand this, everything will seem to be very, very easy. All right, so we've established the fact that the auditor is an independent professional, right? And we've established the fact that it is statutory. It is by law that there should be an audit because there's what they call a statutory audit, right? And we've established that an auditor is meant to give an independent opinion on a financial statement if it's true or fair. So, true or fair, independence. Let's just note that down. Those terminologies are very important. So going forward, an audit is a form of assurance engagement. So assurance engagement is more like a set. Let's use in our normal typical elementary mathematics. So an assurance engagement is more like a set, and an audit is a subset, a more serious aspect of the global picture. So assurance is just like, okay, just tell me give me your opinion. Is this thing quite true? Or you may not even need to even use substantive tests like tests almost or 90% of the numbers. You can just do a review. So assurance engagements basically can be a review, but the aspect of it of assurance, as I said, audit is like a type of assurance. So the aspect of assurance that is done more thoroughly, please note that down, that is done more thoroughly is an audit. So now from our text, an audit is a form of assurance engagement. The objective of an audit is to enable the auditor to form an opinion as to whether the financial statement of an entity gives a true and fair view. An audit is designed to provide a high level of assurance to the users of the financial statements. So it provides an high level, please note that down, it provides a reasonable level of assurance. A reasonable level of assurance. A reasonable level of assurance, which is also an high level of assurance to the users of the financial statements. If someone has an audit firm, or let's say we have Papa Jasco and Co audit firm, or Taiwan and Co audit firm, or a typical audit firm that we have, this is also a testable aspect of this. This can also come as your exam. They can ask you that what are audit related services. Audit related services basically are types of services that is performed by the audit firms that is not really their primary, please note that down, that is not really their primary objective. So audit related services do not provide the same high level of assurance in some cases, or also it provides in some cases, but basically it is not to provide high level of assurance. Now audit related services includes three major aspects, which is review of data, agreed upon procedures, and compilation, as seen in the screen. This review of data is a very typical thing that we see in our organizations, but we may not be able to know, we may not know that that is what it's called. But review of data simply means that maybe for instance, now as the year is going to an end and you work in, let's say, Unilag, for instance, like one of our students here, all right? So you work in Unilag, they want to check your receivables. They want to check that, okay, you have looked at your trial balance. I'm the owner or I'm the stakeholders of Unilag as a university, and I've seen that the trial balance is showing 2 billion, and that 2 billion is making me doubt, even as the manager myself, or the MD. The MD too can appoint all the firms to do some primary assignments in the books, and I'm beginning to doubt the receivables. Can it be 2 billion? I expect it should be lesser than that. So they can now appoint an auditor to go and check that particular subject, that particular aspect of the business. So it is less detailed than the work performed in an audit engagement. As a result, the level of assurance provides a moderate rather than high level of assurance. So it's just a moderate level of assurance. Since it's not the total aspect of the business, I just want to check the receivables. Our students, are they owing these amounts? If possible, say, like, I even ask that, okay, fine, the people that are owing, give me the top 10%, or give me the people that owe the highest. Let me see their names. So a review of data is just like checking an aspect of the business. You can also check your revenue. Okay, fine, help us review our revenue and give us the maybe the top 5 customers. So most times, most auditors that do this, they will actually have um they will actually have staff that are good using advanced Excel. So it's just basic, or no, it's not even basic. So to them to be basic, but it's just using a lot of advanced data or big data analysis to bring out information that can help the business. And also we also have the agreed upon procedures. So agreed upon procedures simply means that after engaging that practitioner, so we will now tell the practitioner that this is how we want you to do it. We'll give you a particular guidelines, we'll give you a procedure on how we want you to check. It could be our inventory. Like our inventory, we believe that our inventory balance, we don't really believe that since statutory audit is coming, and most of these things they get to be done before the statutory audit, right? Or possibly maybe there is a fraud that just happened in the company, and they want someone to come and check that this fraud that happens, let us dive deeper. Or possibly they want to lay back some stuff. Let me give an example of this review. Hey, let's review of data. Let me go back a bit. I remember I was working. Remember when I was working in pharmaceutical, because I like to use that example. And the company wanted to do a merger, a merger with one big company, and that company is going to be in charge of the distribution of our products around the country, right? And we had sales reps, sales executives, and those sales executives, the the company realized that we'll not really be needing them. We'll not really need them because we already have distributors, and those distributors they have their own sales. That company that is into distributorship, they also have their own sales reps. We actually don't really need a lot of sales reps again. The company now thought that okay, fine, let us downsize, as they call it. Let me use the word, or in layman time, let us sack some of the sales reps. So at that point now, before sacking them, it's very important. Like I said, some of this review of data, agreed upon procedures, compilations, they are actually done sometimes when something happens, or maybe a restructuring, or a merger and acquisition, or a notice of a fraud, or downsizing, or statutory audit. So in that case of the company I'm talking about in question, so before we can now let those staffs go, before we can start lay them off, so we have to first check. The managing director had to first inform me, and the accounts department, that okay, we need to know the balances, the receivable balances of this our sales reps. When I mean receivables, I mean their debtors list, their debts. What is, because as a sales rep, they have collected stock, like collected inventory, and you'd have also sold it for the company and remitted, like as in paid for those stock. So we needed to know the debt balances. So someone had to come in to do a review of data to check maybe that is what those guys are actually owing. So an agreed upon procedure, if I use that the same context, you're like saying, okay, fine, audit firm, you have come to do a review of data. But when you want to know how much each sales rep is owing, I want you to first check how much they have sold. So as the accountant, I'm telling the auditor that fine, go and get how much each sales rep have collected from the company, like how much stock that we have issued to the sales rep, and also check our account statements to know how much each sales rep have paid in. So with that, arrive at a receivables, or arrive at the debtors list. So we are laying down that procedures for them. So that's basically a typical example of agreed upon procedures that the pharmaceutical company can give to the auditor in perform that assignment before laying off those staff. So also compilation. Now, if you work in a very new company or a small company, if you work in a very new company or a small company, there's what they call okay, I don't have an accountant. Because when you go to all these Ladipo, and you see all these Igbo boys that are selling tires, spare parts, a lot of them don't really have an accountant. They just know how to buy, sell, but there's nobody that actually manages their books. Although they have their invoices, they carry out up and down Oga, come buy. When you want to buy, they write the invoices. They don't even have experience about tax, but they shall know they are Emeka Limited or Chiobi Limited, Chiobi Spare Parts Limited, but no accountant, just sales boy that they put inside shop, and the owner of the business that is importing the tire from Europe or importing from somewhere in Japan or China. So those ones typically they do not have accountant, but because of this our tax go up and down, they know that they have to file their tax, and also they also know that if they want to borrow money from the bank, they need a good and audited financial statement, or they need the investors. They need to go to the east when they are going to east in December. They need the Chief Obi to invest in their tire sales business, and Chief Obi will ask for, oh yeah, give me your audited financial statement. All right, so that is why they now know that they need auditor. But typically they believe that they're letting auditors stay in their shop from 9 to 5, they don't need it. So what they do is that when it's time for, which they always wait for that a dime minute, they will now go and get an accountant or an auditor to help them prepare their books. So it could be their tax computation, or it could be statement of profit or loss. So you now stamp, this is auditor stamp, ACCA, this ICAN number, yes. So it's confirmed. So that's basically a compilation. So from our text, the practitioner is engaged to prepare financial statements or other information, and not to audit or review the financial statement or other information, but someone else. For example, an accountancy firm may be engaged to prepare tax computation for a client, preparation of financial statement for a sole trader or a club association. So compilation is when mostly I said most times is a sole trader, a startup, like a company just starting up, or maybe one company that cannot afford an accountant that will be resuming the office 9 and closing, or 8 o'clock and closing 5. A small business, these typical shops that you go to, right? Or you go to a small supermarket. Most of them don't really have an accountant that is stationed there, or an experienced accountant. They just have a sales girl and a sales boy. But they know that it is statutory, it's by law that they prepare tax, and also they also need their financial statements. The owner of the business wants to know how much he or she has, the cash flow statement, the FS, or a small balance sheet, just know, okay, this is my position. But they cannot really at that moment afford an accountant, right? So most of those businesses, auditors do compilations for them. So they go to the businesses and help them look at their, there's a way I can get your bank statement, especially small companies. It's actually very easier. You can get their bank statement, their invoices, their receipts, and look at the stock they have on their shelf, and prepare a financial statement for the year. So that is what compilation is basically all about. A small business, please note that down, very important. A sole trader, as stated in this text, a sole trader, a club or association, mostly small, that cannot really afford the services of an accountant. So auditors go there to do compilations for them, so prepare their financial statements for them. Or some of them can actually afford an accountant, but possibly they may feel it's not necessary. But the main objective really is for an auditor to go there to prepare their financial statement. Normally it's the manager or the accountant that has to do the FS. We all believe that auditors normally will just go and review the books and say, okay, is it true or is it fair? But in this position, the auditor will now serve as the accountant. The auditor will now serve as, even in a context of a business that is not even small, which compilation can also happen, right? An auditor, possibly the books, the accountant are not really competent, or the manager does not agree with the figures of the accountant. They can also engage an audit firm to come in and help them prepare the financial statements and the tax computation. So that is a compilation. But I know because I worked in a company before that, they have, an account department is there that prepares the financial statement. but they don't have a tax. Maybe the account department don't take care of the tax. So what they do is that they go out, they actually engage a particular audit firm to help them prepare their tax. Their company income tax and all statutory obligation, their VAT. So that is also a compilation. So it basically is all about subcontracting some services to accountants that normally to audit firms that normally accountants should do. Please, do you understand? Perfect. All right.
I believe you are enjoying the video, right? Perfect. So do well to enroll for the success-oriented online class at Excel Academy. See you there.